All right, well, good. We were just, if you have any questions, I can sure something else back.
How's it been?
Late nights and middle of the night. Get to start all over again. Yeah. Well, usually when they start out that way, they kind of stay there.
All right, we will call to order the June 9th meeting for the Oklahoma City Post-Employment Benefits Trust. And the first item that we have is approval of the minutes from the May 12th meeting.
Move it.
Second.
All in favor?
Aye.
Any opposed? Great. Next is to receive the monthly investment flash report as of May 2014, and Doug is here. Glad he's here with us this morning to speak to us about the investment report.
Good morning, everyone. I am here to talk about the May 31 report. It's a brief report. I won't spend much time, but I'm here to answer any questions that you may have. If you will look to the market environment page, you can see that May was yet another month where equities continued to increase fairly dramatically. And if you look back over the past year, you see returns for the S&P 500 up 20.5%. And as you go into different parts of the market, the returns were mixed, but all quite high. If you look to the REITs, which are real estate investment trusts, they were up 9.8%. And if you look at the Alarian MLP index, which is something that should be very familiar to all of us, these are the midstream energy companies that are organized under a partnership structure. Very important to our local economy, up 18.4%. As we go down to the next segment of the table there, you'll see the Russell Top 200 and the Russell 1000, very largest companies within our marketplaces, were up, again, almost 21%, and we're seeing something a little bit different where the smaller companies are trailing over this past year. So we're in the midst of what we see as two transitions within the domestic equity market, possibly. More a favor to larger companies, and then also a favor to more stable companies or less momentum-oriented companies, as we've seen some of the very popular parts of the market last year really have trouble this year. There's been a rotation. And as we look down into the international part of the market, you will see that the returns are positive there, not quite as strong, but we are starting to see somewhat of a rebound in emerging markets, which had trailed over the past 3 years. On the fixed income side of the table, on the right-hand side, you'll see that long treasuries performing very well over the month and outperforming the other sectors of the market, as inexplicably interest rates continue to move slower or move lower, which at the beginning of this year, there was only about one shop that we knew thought that that was a possibility. But as we've seen first quarter real GDP be revised lower and lower, now it was negative 1.4% when we thought we were going to have positive for the first quarter. So interest rates are uncertain, and I know that lower interest rates hurt a lot of us that have liabilities out in the future, and sometime they will increase, but it appears to be very uneven. As we go on to the actual the third page of the report, you can see the returns here. Over the last month, we did have a nice recovery where the fixed income was up 1%. The appreciation fund, remember our extremely large cap fund, Dreyfus Appreciation, was up 1.7, but over the last 3 months, a very nice return at 6%. Delafield, our contrarian value equity manager, still in a rising market like this, it's difficult for them to perform, but they were up almost 18% over the last 12 months. And if you look at the longer-term results, it does take some time to build their portfolios and to enjoy those results. Stevens, one of the more growthy-oriented managers that we know of, and they did have difficulty over the last 3 months. And then going down to our new manager, Causeway, which is a developed market-focused fund, not a lot in the emerging markets, and you can see that over the last year, 3 years, 5 years, and even 10 years, their results have been quite good. When we look at the total fund, 10.8% over the last year, well above the actuarial index. The policy index and the allocation index are difficult for us to beat because we have a very conservative bent to our equity portfolios. We want to have capital preservation, and in a market that goes up 20%, it's sometimes difficult for that overall construction to keep up, but if markets do head lower, we have confidence that they will outperform.
At what point do we look at our structure, our allocation structure? I mean, are we getting to a place where it's worth reevaluating that?
Well, we always say that if you build a conservative structure or a cautious structure, you don't want to reevaluate it when the market's hitting an all-time high.
Right.
That would tend to push you into a more aggressive manner when you need to be taking away from some of those aggressive investments.
But is there a certain size that we get to when we start looking at our posture, not looking at the market, but just looking at our allocation?
That's a good point.
Do we get to a certain point to where we're saying, well, now it's time for us to loosen that up a little bit and maybe shoot for a little bit higher target?
I think that that raises a great point. I'm going to take it a slightly different direction, and it's on the fixed income side of the portfolio. We have one fixed income manager. You recall that was since the beginning. Now we're of a sufficient size, and last month my colleague said this pretty strongly, that this is a direction we need to diversify. If you look at it, we have 30% of the portfolio, and it's just keeping pace with the market. And we want to keep pace with this market, and one manager, let's take a look and move into a different structure here. Because fixed income, interest rates are relatively low. There are some places now that we're approaching $30 million that we can diversify out in a cost-effective way to build some additional return in that part of the portfolio. So that's the direction I would take it. As far as the equities go, it never appears that there's anyone doing extremely well in the structure, but when you really put them together over a market cycle, it's a very cohesive design. Thank you for the question.
So at what point will we be provided with some options in terms of some other fixed income managers? Is that something we should look at like within the next year, the next 6 months?
I would say the next 3 months.
Okay.
And I would also like to propose at time, it's been a few years since we've really looked at the investment policy, and while we have the investment committee together, I think it's a good idea to really take a look at both of those areas.
So you're thinking in the next 3 months to try to get an investment committee meeting together, and okay.
Yes, that would sooner rather than later.
Okay, great.
If there are no further questions, that concludes our monthly flash report.
Are there any other questions? All right, thank you, Doug.
Thank you.
Appreciate it. All right, so I would accept a motion to receive the monthly investment flash report. Second. All in favor? Aye.
Aye.
Okay. The next item is to approve the audit contract between the Oklahoma City Post-Employment Benefits Trust and BKD. Basically, this is the same amount that we had in our contract for this past year, and this is actually setting the contract for the audit, the work they'll do next fiscal year, but for this fiscal year's financials. We have a 3% increase on our contract overall for the city and trusts. But what they do is they'll go back and reevaluate the hours that they spent on the contract in the past year and basically reallocate those costs based on the overall contract amount. In essence, what happens with this one, and I'm guessing we had a little bit fewer audit hours than what were anticipated originally for 14, that it basically stays the same as what it was this past year. And so that's what we have before us this morning. So are there any questions?
Move approval.
All in favor?
Aye.
All right. Next item is to approve the fiscal year 2014-15 annual budget. And Chris York is here to present this information for us. Chris is Management Budget Specialist in the Office of Management Budget.
Good morning. I'll be going over the FY15 Opebt budget with you, but before I do, I just want to quickly acknowledge Lindsay Delicio from the Budget Office and Colin Fonda from the Personnel Department for their efforts in putting together the document in front of you. The fiscal year 2015 Opebt budget is approximately $30.5 million. As we compare that to the FY15 to the prior fiscal year budget of $30.9 million, we see that there's been about a $400,000 reduction or 1% reduction overall. The reduced expenses are attributable to some enrollment shifting in the HMO plans, which decreased the total number of participants we built the budgeted expenses off of, while in the indemnity and dental plans we had better experience than projected in calendar year 2013 due to less claims, or rather less costly claims. The general fund subsidy remains unchanged at $18.8 million, and at that level we expect to add about $5.6 million in fund balance in the FY15 year. And while perhaps this figure could have been reduced to match the decrease in estimated expenses, it remains the same in order to continue to build fund balance and provide a greater reserve to draw upon for future liabilities of the program. And with that, I'd be happy to answer any questions you may have.
One of the things we discussed earlier, Chris, was that the difference on the indemnity was that basically where you see, if you look at that top line on the indemnity revenue, that we actually had more anticipated in 14 than what we're seeing now, and that's one of the reasons that we have that drop.
That's correct. So as we project out, we expected last year to have about a 7.5% increase in the medical inflation rate, so total cost, and that's not what we saw in our actual claims experience.
So when they came back and reworked the premium equivalent rates...
That's correct. It was lower in 2014 than we had in 2013.
Okay. Are there any questions? I take a motion to approve the budget. Second. All in favor?
Aye.
Thank you, Chris. Next item is acceptance of the interim financial statements for the 10 months ended April 30th to 2014. And Mitchell Massey is one of our accountants in the Accounting Services Division. He'll be presenting information on this.
Good morning, everyone. First, I would like to direct your attention to page 3 on the management discussion and analysis, the changes in net position reconciliation. Currently, the trust is reporting net position at $33.95 million. This is an increase of $9.4 million over prior year, when the net position was $24.56 million. Overall, the financial position has improved during the year. For the fiscal year, the trust gained approximately $7.64 million. Of this, $5.2 million is from investment income, while $4.5 is from excess employer contributions, offset by a loss on net asset revenue of $2.1 million. Next, I would like to direct your attention to page 6, the statement of changes in planned net position reconciliation. Additions are reporting at $28.8 million versus the $26 million in the prior year. This is mostly due to investment income increases for appreciation and fair value of investments, as contributions remain stable. The benefits were $21.1 million, which was an increase of $491,000 as a result of the indemnity plan expense increasing from the previous year. Next, I would like to direct your attention to page 10, the asset allocation guidelines. In our asset allocation guidelines, fixed income securities were reported at 30.1%, leaving the remaining to equities at 69.8%, which is right on our target. If you look above on page 9, the money markets used to pay claims are reporting $3.5 million compared to the prior year of $4.5 million. Are there any questions I can answer regarding the financial statements?
Are there any questions? I think we're still consuming.
Thank you.
Thank you, Mitchell. All right, take a motion to accept the interim financial statements.
Move it.
Second.
All in favor?
Aye.
All right. Next item is to ratify the claims listings. Are there any questions?
Move it.
Second.
All in favor?
Aye.
All right. Are there any reports or comments from the trustees or from staff? Seeing none, we are adjourned.
Okay, shoot.
Okay.